Hi, on this video, I'll show you a simple trading strategy that makes use of 4 types of indicators. If you haven't subscribed, please click on that subscribe button down below and that notification bell so that every time there's a new video on this channel, you will be notified right away. This strategy makes use of 4 types of indicators. The first one is the 14 simple moving average. The second one is the 50 simple moving average. The third one is the 200 exponential moving average. And the last one is this RMF indicator at the bottom of the screen. Now, this indicator is a custom indicator that I will give to you for free if you send me an email on fxmyriad@gmail.com. I will also put the email address on the notes of this video down below. So right now, what we're going to do is we're going to put all the indicators that we need on the chart. So right now, we already have the RMF indicator at the bottom of the screen. Again, I will be the one to give you this custom indicator, so send me that email. So first, what we're going to do is put the simple moving average on the chart. So right here where the indicators are, just type in simple moving average. And then you will see the simple moving averages 6 and 20 by Why Me again. Click on that, and then what you will do is go to the settings and then change this value to 14 and the one here below to 50. And then go to style and then change this one to blue, make that thicker, and then change this one to red, make that thicker as well. And then the other indicator that we need is the exponential moving average. So again, let's look for it. And then we're just gonna pick this built-in moving average exponential on TradingView. Click on that and then change the value to 200. And then we're going to change the color to orange and then make that really thick so that it's very visible. Okay, so right now we already have all of the indicators on the chart. But first we will learn how to use the one right here at the bottom, the RMF indicator. So let's just hide the 2 indicators right here on top. So the way to use this is very, very simple. See how we have 3 colors on this indicator. The red signals a sell, the green signals a buy, and the gray right here signals that you shouldn't do anything. Again, right here, you see this green color. It means that we're ready to take a buy trade. Again, right here, we see this red color, and it means that we are ready to take a sell trade. And right here, if we see the gray, it means that we shouldn't do anything. We shouldn't take a buy or a sell. Right here again, we see the gray. It also means that we shouldn't do anything. So that's how to use your RMF indicator. So let's pull up the simple moving averages 14 and 50. So the way to use this is that if the red line is above the blue line, it means that we're ready to take sell trades. And if the blue line is above the red line, it means that we are ready to take our buy trades. Again, right here, the blue line is above the red line, which means that right here, we are ready to take our buy trades. Again, right over here, we see that the red line is above the blue line, which means that we are ready to take our sell trades. We will only be ready to take our buy trades if the blue line crosses over the red line. And we will only be ready to take our sell trades if the red line right here crosses over the blue line. Now let's learn how to use the exponential moving average. So let's hide the simple moving averages first, and let's pull up the exponential moving average, the 200 value. So the way to use this is very, very simple. So if price crosses above this moving average, then we are ready to take our buy trades. And same is true for this. If price crosses and closes below this moving average, then we are ready to take our sell trades. So how do we use all of these indicators together? So what we're going to do is we're going to put them all together on the screen. So now you have 3 lines or 3 moving averages right here. And you have the RMF indicator at the bottom of the screen. So the way to use the 200 exponential moving average is that it is the general direction of the trend. So right here, price is below the yellow or the 200 moving average. It means that we are looking for sell trades only. Right here, price crosses above the yellow moving average. It means that we are only looking for buy trades. Right here, another example. Price is below this yellow or the 200 exponential moving average, which means that right here, we are only interested to look for sell trades. Again, right here, we see that the price is moving above the 200 exponential moving average. So right here, we are only interested to look for buy trades. And then we need to use that together with the cross of the simple moving averages, as well as the change of color right here on the RMF indicator. So right here, we have an example. We will treat the blue and the red lines right here as one indicator. So right here, we might be in for a sell trade. Why? Because price is below this 200 exponential moving average. At the same time, the blue line crosses below the red line right here, which means that we are looking for a sell trade right over here. And at the same time, look at the RMF indicator right here. It is also signaling us to take a sell trade. So this means that all of these indicators are aligned and you are confirmed for a sell trade. Right here, another example. You see that price right here is moving below the 200 exponential moving average. And then right here, we see a cross of the simple moving averages. The red line crosses above this blue line, which also signals a sell. And if you look below on your RMF indicator, it says that you are actually in for a sell. So because all of these indicators are aligned, you are in for a confirmed sell. Right here, we have another confirmed entry. So you see how price is traveling above this yellow moving average or this 200 exponential moving average. And right here, we see a cross of the simple moving averages. The blue line or the 14 simple moving average crosses over the red line or the 50 simple moving average, which means that we are confirmed for a buy. And right here, if you look below, you will see that the RMF indicator is really signaling a buy trade. So because all of these indicators are aligned, then you are ready to take a buy trade right over here. Another example right here, you see that price is above the 200 exponential moving average right over here. And right here, the blue line crosses over the red line, which means that we are really in for a buy trade. And then if you look down below, you see that the RMF indicator is also indicating that this is ready for a buy trade. And because all of these indicators are aligned, it means that you are in for a buy. Right here, another example. You see that price right here is above this 200 exponential moving average. And then right here, the blue line crosses over the red line, which means that you are ready for a buy trade. And then right here at the bottom, you can see that the RMF indicator also signals a buy trade. So because all of these indicators are aligned, then you are in for a buy trade. How do we enter trades? So for example, right here, price is below the 200 exponential moving average. And right over here, the red line crosses above the blue line right here. So right here is where the cross happened. And this is the close of the candle. So what you're going to do is you will take your trades at the close of the candle right over here. And you can target at least a 1:1 risk to reward ratio. Right here, we have another example. Price is moving above this 200 exponential moving average. So we're going to look for buys. And then what we're going to do is we're going to wait for the crossover of this blue line and this red line right here. And upon the close of the most recent candle, then we will take our trade. So what we're going to do is we're going to take a trade from here. Maybe just do a stop loss of at least 2 candles behind it. And then we can target at least a 1:1 risk to reward ratio. That's it. I hope that was simple enough for you. And let me know if you like this video in the comments down below. Thank you very much and see you in the next video.